Good afternoon. Welcome to OptionsTenders, the weekend edition. We're going to go through SPX on multiple time frames. We're going to check out the major indices on the weekly and the monthly, give you a look at those. And then we're going to talk about a few of these things I have in my notes here. And I want to emphasize the fact that I think the top is in, and whether we have a recent top with this next move, I think the probability is that it's ending here or has ended as of Thursday. I made a video about having a top in, but on the lower time frames, I do want to suggest that there's alternate scenarios. And those could play out. I think I did those for the members. For sure, I did it for the members video. If you're interested in that, it's $4.99 a month. It just, the 99-cent a month and $4.99, it just really helps support the channel so I can continue to do these videos and make it worth it. YouTube obviously doesn't pay a whole bunch, but with the memberships, it really helps for the time that I put into these charts. So I don't want to ramble on. I think the major top is in, and now I think the recent top is ended or near. And what I mean by that is, price action can, move up a few pennies. It can move sideways for a few days before breaking lower, since the momentum is to the upside. Okay, so we have SPX on the monthly time frame. Now, was our catalyst from the Moody downgrade? I'm not going to spend a lot of time on that. Was that just our random catalyst? We work with the charts here, and it's no coincidence that every time you get to this pivotal point for reversals, that all of a sudden there's a catalyst, okay? Now, a lot of people are focused on news and what those catalysts are. That's fine. That's no big deal. The whole point that I do is I speak with the charts, and when a catalyst happens, does that accelerate the move or reverse the move? That's all. And so far, all of the news-driven tariffs brought the market down, and then as soon as you start talking about good news with tariffs or that they may go away, then the market goes up. That's that V shape that we had. Now, did anything actually occur with tariffs? Were any numbers affected? Did any of them actually impose any effect on the, sentiment? But no, the tariffs didn't do anything. None of them actually came through. So it's all talk, it's all rhetoric. The market's moving. It's just accelerating on what it would have done anyway. All right. So we have one of the reasons why I think the top is in. We have the 1929, 2000 top, and now a rejection off of 2025 gave us a valid trend line now, okay? So if the market tests that trend line up top again, that is the bullish scenario for me, okay? And then I think we have another objective short or objective top in if price goes straight up and touches that trend line once again. That could be 62, 6,300 or so. And then I'll show you the wave count on the lower time frame in this video too. So make sure you play it at 1.25 or 1.5 speed so you can get this information. All of it matters in this video, but I don't want you to skip around on it and get bored and then you end up missing one portion. Okay, so here's 2008 top with the 2022 top, and that was the confluence there perfectly with the two historic trend lines that I think that our top is in, okay? Now, with the market sentiment, when we get down to the daily time frame, we'll talk more about that top being in. So at this point, now the month is not over. We're mid-May, and is it May sell away or go away? That I think is still possible. So let's watch this candle for the month. At this point, we're just bullish. We're over the 8 EMA. We have to close over it, and we're over the 20 moving average. There's no arguing that. But I think we have a ceiling. Okay, that's the only argument that you can put at this point. Now, with the consolidation area that we have here, all price is doing is probing right back into that consolidation area. We're exactly at that doji body. We're right in the middle of this, so we'll see what happens coming up this week. As for the moving averages, you got that. Nothing to see, maybe a demarc. There's probably nothing there. We're going to check it each and every month anyway, just so we can follow and see how this plays out. Now, we're not back above 4 candles. Here's 1, 2, 3, 4 candles. We need to close above that 4th candle to negate this count. I think this count's going to go all the way to the 9 count exhaustion. It's so far at 1, 2, 3, and I think we can continue. And the other thing, another thing that gives me a look at this being the top of the market is that we have our bear cross here on the MACD for a momentum indicator, negative divergence on the histogram, but no negative divergence here. If price is able to go creep up to that new high, we're going to get negative divergence on this monthly time frame, and I think that will be another objective short there. So we had negative divergence in the RSI that brought us into the correction. Didn't quite get to that oversold area. So the monthly time frame has plenty of room to head to the downside. The slow stoch is trying to curl above. Do we get a bullish move here or a whipsaw? Okay, I think this still has room to oscillate to the downside. Okay, we'll get to the McClellan oscillator. Let's go to QQQ. We're going to skip SPY because we don't need to look at the volume. Okay, so, I mean, same situation. We're really deep into this consolidation area. If we get up here, it's going to negative divergence. That's the theme for that one. Now, IWM. With IWM, I think that we are in this expanded flat. I think we have an A, B, and we're looking for a 5-wave move down. I think we're in the wave 2 right now. This is an impulse 1. And I think this is clear, impulse 1. And the wave 2, we're just now getting to the 50%. And so if the market wants to continue to make a new high, I think maybe the small caps go up to that 62% retracement into that zone there, about 217, and it can peak above. But if you notice right where that 217 is, that's right where this consolidation zone back here is. So that'd be an objective short right there, and you see the support resistance here as well. Okay, so if the market goes strong, I don't think this makes new highs at all, no matter what. But if this seems to be a little bit stronger, and I put a video out. The real reason that the market is going to, collapse, not in those words, it's the bonds. I talked about bonds. I talked about gold, the dollar. And so that was for members as well. And all that value with these videos for $5 a month. That's just insane. There's people that are charging hundreds and hundreds of dollars for their work. Okay, SMH. SMH is into resistance right now. That's right in the middle of these dojis here. That was just a crazy consolidation, and we're right back in there. This move, I think, has pretty much finished there. We're looking for an AB and perhaps a 1-2, but if this is an AB all in itself, then we need to continue this. But I think the correction's not over. No matter what happens, I don't think the correction's over. We're not looking for new highs in this at all. DIA right into resistance. This was a geometric line. We'll see where the month ends. I'll leave it there for now, but it's not a valid trend line. It only has 2 touches, so we'll see what happens. VIX. Here's the VIX dropping. We're in a rising cycle. I do think this finds support here coming up soon. If not, again, Monday, maybe the catalyst happens, but not a whole lot of room to. I don't think we're going to make lows. We have some really good support in these areas here. 16, 17. It seems like 17 is the area, but you have lower areas here, 16 as well, and that was support before. Also with wicks. So on the monthly time frame, if you go to 15 and come back out, that counts just as well. So let's go over to the SPX again. And if I remember, we'll go to ES as well, because it's super important to see that there's two major gaps. At least I spoke about it. If I remember, the two major gaps there, they're going to be filled sooner than later. I've never seen two major gaps in the ES. Maybe two gaps, little gaps that just kind of hold for a little bit, but usually they're closed quick. And two large gaps, at least, no, they're going to fill. They're going to fill. Okay, here's the weekly time frame. We're above this resistance. Looking at this weekly time frame, we do not have any sign of a reversal. There's just nothing there. Okay, so we have to be careful of getting super bearish right now. We need proof. Although I'm contrarian, I love putting on the in-out spreads and looking for these reversals. And so I'll continue to look for the short, and then there's more conservative plays. If you get back underneath this 5,800, it might be even a little bit lower, 5,780. We'll look on the lower time frames with the moving averages and such. Here's your area. Look how they're getting tight here. We're going to have another big move, and I think it's going to be to the downside. You get back under this 20. This 20 is the only thing that matters on this time frame to me. You get back underneath the 20 and you hold, that's going to be super bearish. So we're going to look for some sort of price action eventually, and I think sooner than later, to come back to this 20, this whole cluster, because they're all right in the same range. And there's this gap too, so we can close the gap and still be in this range on the weekly time frame. And if we hold this, that's where I think we might reach this new high, and then again, that will be a major short. Okay, I really need a whole lot of proof if this is going to be a wave 1, and then we get a wave 2, and we just continue to ramp to 7,000, 8,000. And I'll show you that again in the sentiment. More reasons why I don't think that is a probable situation. All right, so watch these moving averages on the weekly. Very, very important. Okay, we're above them. It's bullish. Now we have to hold above them. Let's go through DMARC. 3 count. Nothing really to see here. Now, on the MACD, still no crossover. All right, even with this close here. And on the Qs, I'll just jump over there really quick. We have a slight green histogram. We're still in the bearish territory. Let's see what happens with this, okay? It's this really says a lot to me with the with this MACD. Even if it crosses a little bit, we're still in the bearish territory. And if we make a new high here, we're not even coming close to making new highs in the MACD. All right. I would say this rolls over. Now, if we get this solid cross, we pull back, and then we start going higher, and this thing just continues to go up, then there's nothing that says that we're not going to go to that 7,000, 8,000. if you start getting more evidence like that and this thing just starts ripping up, I just can't I can't jump aboard that at this point. So we're in bearish territory at this point. Actually, we might have a really small histogram, green histogram. It looks like it's 0.0019. So starting to get that cross. And yeah, we'll watch the slow stochastic, see if that starts to roll over. Very interesting. Let's go with the cues again, just so we can get a visual. Quickly. So we had that rising wedge back test. That's all we're doing right now. So we're back testing. And I'm not saying that we can't make new highs again. When you have wedges and you break down, maybe this is a wave 4 and you make this new high for a wave 5. And, that can happen. So far, there's no evidence of a reversal. We're right in the middle of this consolidation area. And also, I guess you can draw that downtrend line that was holding there. As for SMH, again, this weekly candle just held on. That was our previous resistance. Price gapped over it and is just up into this consolidation area. The midpoint is also resistance as well, because there's a lot of trading here. Because there's going to be a volume shelf because of all the trading. So we're at that volume shelf right now. IWM. Okay, so right now we're at the lower range of that consolidation area I was talking about earlier. So it gets a little bit heavier, if I may, at around 215. But we're at this resistance right now, and also the 50% retracement. So this could be a turning point right here, right now. You see the supports, the wicks became resistance here, resistance, and then got above it. Barely creeped above it and then took off, and now we could just reverse from this point. Diamonds again, this was just a 2 points here, just a pivot, nothing to really check out there. Maybe this is the channel, so I'll close this on the monthly. I'll leave it there because you can get monthly wicks through those type of price action, and then that would make that a valid trend line on that level. So it looks like we're in this channel. We're holding the channel bottom. Can we get new highs? I guess so, but maybe it's 1, 2, 3, 4, and 5. It's possible. All right. VIX. Again, I'm not in that camp, but I'm not afraid to reshort it once we get to new highs. Here's the VIX. We had that bullish falling wedge. I think that move is done. We're in a new kind of cycle era here, and we'll see how this plays out. I was looking for just a good base here of price action, and we're looking for a low at this point. We're right in the about the middle of this consolidation area. Do we make it a little bit lower? We're also in the cycle low here. Okay, for the weekly time frame, we're right here within 3 bars. I think next week would be a good week, and we're right at the end of that kind of that era to make a low, and so I think it's happening next week, according to the VIX. SPX on the daily. All right, now this is where we're gonna kind of veer off and after the traditional look. And here's the hint right away. We should hold this area if we're bullish. If we're going to go make those new highs, this is the area price action needs to hold. Okay, doesn't mean that that's the end all be all where it holds, but this is right where, if you put the moving averages on, you have your bearish rising wedge. If you break down, hold the zone. It was a great support resistance, and that's where the consolidation came from. And there's other reasons why this was such a hard spot to get over. That was a 162% extension from 2022. And now you have it just visually and just moving averages. If you're on a naked chart, if price action starts to break down, this would be the obvious place where it holds. You have the 20, so that would be the upper end by the time we probably get there. And then you have the lower end where the 50 is. And so just visually that matches everything there. This should hold and hold on to that curling, right? And give us a little cup and handle there, and we should head over to those historic highs once again. Now, does it have to? It could hold the 200. All right, so it doesn't have to get down there, but if things get extreme, you close the gap. The gap's right at, look at that. The gap's right at the top of that area as well. So maybe close the gap, and we'll see what price action gives us at the time. Now, what could happen, and this is just a guess, this is speculation, you could get an impulse wave somewhere down here. Maybe the impulse is down here to the 200, you get a bounce, and then you get another. So you get some sort of zigzag. Or maybe go straight down here, you get a flat pattern. Anything can happen in this area. And this would be a wave forward too. So think about that too. This could be a flat pattern that holds on. This could just be a really quick drop, and then you start to gain momentum again. So that's kind of speaking in bullish terms. And I did give you a bullish scenario video also last week. All right. That's all I want to show on this chart. Let's look at some of the indicators, including the McClellan oscillator. I'm going to add the McClellan oscillator with the summation index and talk about that too. So on a DMARC status, we have a 6 count. We had the 9 exhaust, got a consolidation, and we're at the 6 count so far. Let's see how that plays out. We're getting extremely overbought. And so what this should look like, you see momentum still to the upside. We're screaming to consolidate. That's just no matter what. I think reversal, but consolidation could bring us down here. That could bring the RSI, cool it off to maybe the 50. And then if you start to go higher for new high, that's going to give us this excellent negative divergence. So, but at that point, if we start to break down and we hold, I think we're going to new highs anyway. So we'd have negative divergence all over the place. So the McClellan summation index, there's no arguing that this is getting bullish. Okay, we're in bullish territory. Now what needs to happen at this point is very similar to here. So you get over or at the zone. Let's see if price action holds the zone. Okay, on a correction, you hold the zone, and then maybe you get to extreme. If we make it up to these brand new highs, we're gonna be in this extreme area. It's gonna be a great setup. You got the monthly divergences and such. So keep an eye. If this can hold on and curl and get your little higher low, and get into extreme, you're probably going to see us up in this territory, 6,200 or so anyway. Okay, but if this green area breaks down, that's going to invalidate this count that we have here, this wave count where wave 4 should end there, and then price should continue to break down lower. All right, let's add on the McClellan oscillator. And you put these two together and you can compare. This is a summation of each and every day of this oscillator. So we've pushed up here and you can see price action has stayed above in the overbought area. And that will drive the summation higher. Okay. But now we have this negative divergence. I have no doubt about this. This is per this indicator, we're going to reverse. Now, do we get back to the extreme? I think so, probably with a move down here. The thing is, at that point, will we get this curl and hold up, and then we go back into these overbought territories and hold up there and drive this higher? That's what we have to see, okay? But a reversal is imminent. This is what the indicator tells us. This is a very, very good breadth indicator, even if it starts to move lower and lower and lower. And obviously you have to pair this with the big tech stocks, because price action can go higher from NVIDIA or Tesla while, or even Apple. And I'm going to show that setup to members a little bit later today after our hockey game, kids hockey games. So you see breadth moving down, but price action was moving up. That shows that big tech was holding on to things. And then finally a breakdown here, and then just a, shit at the fan. So this is interpreting. And so that's why we're doing this. We're trying to interpretate the indicators. Okay. Volume profile. We don't need to look at that. What we're going to look at here is we're going to change over to this sentiment board. Now, I only do this once in a while. There's no reason to do it very often. So back here, we talked about the Buffett indicator being 211%, way back here at the end of December, and price action still made a new high, but you saw how it was losing momentum. Insane evaluations. I'm not going to go through the entire thing again, but this was historic. This has never happened before. I believe the .com bubble was around what's happening now. Okay. So we're looking at historic evaluations at 192% right now with this last move. That gives me probability that we're looking for a lower high. Now, if price does make it to 211, 215 or so price or percentage while we're making a new high here, that to me, that's just red flags all over the place, negative divergence. It adds on to the whole scheme of things. And again, I'm going to show you this wave count that could bring us up to those new highs as well. So we're all the way back to greed. Fear and greed. That's just the key right here. It had been 21. It had been all the way down to 4, I believe. It was down to 4 at the lows here, or near the lows. And we're all the way back up to 71 as of the 16th. So just an insane flip. And also the 44, the AAII, we're starting to get less bearish here. Now, I am going to bring up the CNN. A lot of people know it. It's all over the place. But I want to show you, maybe you don't have a bunch of charts and stuff. Maybe you're just trading on Robinhood and you haven't downloaded the platform. This gives you a lot of information here. So check this out at CNN.com, Market Fear and Greed. And you can see the momentum, extreme fear, price action. You have the breadth. This is a summation, McClellan summation. So that gives that to you right there. Put call ratio. We talked about this in the Discord. We're at the point where we're just about at a reversal point, and this even gets a lot more extreme here. So we look at a couple different indicators, and we're just at that point for a reversal at minimum. Consolidation. And the market volatility gives you that, gives you the safe haven demand, junk bonds like JNK, I believe it is, HYG. There's a lot of things you can look at. So this kind of gives that to you. So just want to show you that. And so at this point, we I'll talk about in-out spreads. If you want to do a reversal and just keep very light positions, it's gonna cost you about $1 in options jargon, about $1.05, sometimes 90 cents, 95 cents to do some reversal in out spreads on here. And I love these things. Now I'm in core positions as well, naked puts on this market as well. So implied volatility, again, I just made a video on that, is really low in comparison to the historic volatility that's up here. So in other words, options are cheap. They're very cheap, so you can keep a very light position on these until you get confirmation. If you like to trade reversals, then once you get your confirmation with some of the moving averages, and we talked about the moving averages on that confirmation on the weekly, and again on SPX, on the daily time frame, I mean, you get under the 200. That will work to me on this time frame, very similar to the 20 week. So if you see price action break under here, which I do think it'll close the gap and get under, you get back over the 200, and I think that's a safe trade to the upside at that point. All right. You start to break down from the 8 EMA and then this 200, and then you actually break down and hold as these curl lower. We have our slim ribbons that we're going to be looking at too, for members, but get underneath there and it shouldn't break back above, but this will be your first key. That 200 is going to be so important. Hold on to it or break down, but if you break down from it, since it's moving sideways, you climb back over it and hold on to it. Then I think we're going to highs, new all-time highs. All right, and Cannabis, I did a video on that. I think I'm just going to keep this up there. This next decade, I think this is the best spot to be in, and we're in the earliest. And I've been screaming that for months and months and months. I buy MJ every single week. I'm in individual names. The evaluation on these are extraordinary low. They're great market. I know that there's some catalysts I have to roll through, but watch that Cannabis video. Anything that I have a video next to, in-out spreads, there's a video on that in the tutorials. Options expected move, we're expecting 108 points either up or down. And this gives you a visual of that. I do these manually every single week. I learned that from Theo Trade. I have the video for you if you want to learn how to do these. They're just highly probable that price touches the top end or the bottom end. So you can have your own bias for whatever traditional technical analysis or whatnot. But each end typically hits. It's highly probable. And you can talk about the bell curve and things like that, about probabilities. And that's why we have these here. Now, here's your options expected move. If you want to write them in yourself, I give you those each and every week. And then for the $4.99 members a month, I give you all the options expected moves of the big tech stocks. And also in the Discord, you can let me know if you want any other. I don't read the comments on YouTube as much as I need to because it's very toxic. And so if you want to see, if you're in the Discord, it's only 99 cents. The Discord comes with that and the trade alerts and stuff like that. Go into there and ask me for the options expected move on something that you trade. Maybe it's Palantir. You want those expected moves? I'll give them to you. Okay, and so overall the market structure, and we're talking the weekly and the monthly time frame, we've been positive but cautious because we're looking for a lower high. There's no indication that this market has had negative structure. On the daily, sure, on the daily time frame, you had this lower highs and lower lows. On the weekly time frame, you have a high. Will we get a lower high? That's what I mean by cautious, and that's not going to be confirmed unless you make a new low. All right, so that's what I mean by market structure. There's a video on that as well. And so, there's still indicators that are very, very bearish on this. And so as a primary position, because of the evidence that I told you, I suspect this is going to be a wave 2, and we had lower. And this is a wave C. I have this as an A, B, and then a C, and I'll show you that in just a second. But the bull wave alternative is that this is wave 5, and we make it straight up to new all-time highs, and that's it. And then we start the wave count to the downside all over again. And as for wave 1, it says, or wave 1, if you can't, even though I don't think it's a probable situation, this could end as a wave 1 if it makes a new high or not, and then pull back as a wave 2, and then you go much, much, much higher after that. That is a camp that I can't jump into at this point. So the 65, let me just show you let me go to SPY, and I'll just show you our wave count, and we can end it here. And this is how I get. Here's our zigzag. Here's our count that we have. We have a B, 1, 2, wave 3, 4, and 5. to complete, and I have all of the evidence from these that we get a reversal. Okay, now the other situation is if this holds. Now, if you have a 1 2 1 2 3 4 5, then that could be the end of wave 3. Wave 4 should hold this area. If it does not, I think the other zigzag situation, we go further down. These are the exact numbers. You can copy them down, or you can learn how to do it. Take the bottom of 2 to the top of 3, and you get the 23.6 or the 382 retracement. And then you get another move higher. And these are just place marks. They can break these highs if you extend 1, 2, 3, 4, 5 waves up again. Now, there is one more bullish situation where you just go straight, pretty much straight higher. And if that's a 1 2 1 2, and this is another 1 2, so they call that nesting, and now it's starting to stretch out. But with this, then this should not end. This should just continue to just rise and rise and rise with hardly any, because we have to go through these wave 3s now. Okay, and those moving averages, the 8 EMA should never be really crossed at that point on the daily time frame. And we make those new highs, and we hit those historic highs, and then we drop. All right, so that's a lot of information, but I had to get that out to you. I think I covered everything. I want you to have a wonderful rest of the weekend, and thanks for joining me here at OptionsTender. Have a wonderful day, and we got it in 36 minutes. That's good. All right, don't forget to like and subscribe. We'll see you in the next video.